This Twin Petes Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Petes Investing podcast. This is podcast number 118. It is the 10th of January. It's our first of the year. It's just gone 6:30. Henry's been here since about 5:30. We're just starting. So apologies to Henry to start with. My name is Peter Higgins. You find me at Conkers3 on Twitter. And I'm here with my good friend and colleague, co-host, Henry Viola Hare. You can find Henry at HT Viola on Twitter or X, depending on what you want to call it. So we've had a reasonably good start to the year, ladies and gents, and a very happy new year to you all. And welcome back. And thank you for supporting us and for being there, for your feedback. All of those that have subscribed to YouTube, thank you ever so much for joining us on there. And if you haven't as yet, please do so. I haven't got any mince pies to show you this week, but there's other reasons to come and watch us on YouTube as well. Henry, how you doing, fella?
I am absolutely wonderful. Thank you, Peter. Happy New Year. Lovely to see you. Welcome back to all our listeners. Thank you very much for all your competition entries. Peter and I were absolutely inundated over the Christmas period, but it's great to see so many people engaging with the show. I hope you're all having a great start to the year.
Absolutely. I could use that as an excuse as to why I'm running late again, as usual. But I'm juggling many tasks as per usual on the school run, which is not unusual. And here we are. So let's get into it because we've got absolutely loads to share with you, ladies and gents, on this particular podcast, including the December Twin Petes Investing Challenge winner for 2023, the overall winner for the whole competition of 2023. We're going to be announcing that a bit later on, or pretty soon if it's got. And Henry, I think Henry's chomping at the bit to tell us who that is, so it might be sooner rather than later. We're going to go through the prizes. We're going to talk about our plans for the competition for 2024, which has already started essentially with your entries, which went live. I think what was the first day we had? It was the 3rd of January, wasn't it? But essentially from the first trading day of the year, which have already gone past. I think we're on day 7 trading day now. So we're going to get going, guys. We've got some share tips for you as well. Sorry, didn't say tips, did I? Research ideas. And we're going to talk about some of them that we've already researched and spoke about before that have done reasonably well. And one of them came out with some news today, and we'll see what happens. I'm conscious of these lights, Henry, so I'll let you talk. Keeps going in and out. No, we don't want that, do we? Carry on. You speak,
Absolutely.
Henry.
You're
Tell us
flickering
about
away.
the competition or whatever. But if you see these lights flicking, I don't want anyone to have a seizure that watches on YouTube. So carry on, mate.
Keep your eyes on me, ladies and gents. Right. Competition winner. I am very excited to announce this. Did the maths, crunched the numbers, double checked, triple checked, quadruple checked. So hold on to your horses, hold on to your hats, because here we go. We've got quite a lot to get through. December's winner for 2023 was at Lewis Tullett, that's Tullet, who returned a very creditable 53%, holding Pinterest, Albemarle, Argo Blockchain, Avacta, and Rivian Automotive, all of which were up strongly in December, which I think most of us can agree was quite a positive month. You know, we had quite a good strong Santa rally. But the real standout for him was Argo Blockchain, which absolutely skyrocketed 230% in a single month. I don't know about you, Peter, but I'd be happy with that over 10 years, let alone in a couple of weeks.
It certainly went through the blocks and the motions, Argo. It helped a lot of people on the competition, or in the competition, should I say. And it's been part of the Bitcoin cryptocurrency rally, you know, and what's been going on with that and all the noise around that. which is all very, very interesting. And interestingly, I wrote this down last night. You had the SEC, which is basically the American government's arm for informations and all the rest of it. They came out, and there was an announcement which turned out to not be an announcement last night for Bitcoin getting basically SEC clearance to be used and traded everywhere. And then, essentially, the Twitter account was compromised, is what I'm trying to say. But if you think about it, you've got the SEC, which is let me get this completely correct, the USA Securities Exchange Commission, yeah, and their mandate, the SEC protects investors, maintains fairly, orderly, efficient markets, and facilitates capital information. They're big cheeses, mate. So for their account to be, use the word, compromised for X amount of minutes, it meant that Bitcoin's volatility increased, and in the space of a couple of minutes, it moved £3,000 per coin in a couple of minutes. And then the chair, or the main, I call him main gadget, Gary Kessler, had to put his own tweet out. Gary Kessler from SEC, and said the SEC.gov account was compromised. An unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange traded products. So it hasn't happened yet. But basically, the Bitcoin currency movement just went like a heart rate monitor. Oh, went absolutely ballistic. And some people got traded in and traded out and lost shed load of money last night on that account being compromised. So just be careful what you read on Twitter and what you jump up at, because sometimes it ain't what it claims to be. I want to say something here and congratulate Lewis as well, because I'm not sure he was feeling or sensing something in the water, but 10 days ago, before we even knew that he'd won the December one, or you had crunched the numbers, Henry, he donated to the Twin Peaks charity fundraise challenge, right? And Lewis, thank you ever so much, mate. You donated £25 plus £6.50, £6.25 gift aid, and you wrote, thank you for all the consistent videos and really enjoying the insights and ideas and the community that is being built. Here is my long overdue donation. Talk about some others later on. But thank you ever so much, Lewis, for doing that. And as we always say, those that pay it forward always get unexpected returns. So well done on winning the December challenge. And you'll get your prize, which is you selecting a book of your choice and a membership to ShareScope SharePad, trialing it for a month to see if you want to do anything else other than that. So congratulations. Henry, you've got more news.
I do have
regarding
more
the challenge.
news. So
go for it, mate.
This is the really exciting one, ladies and gentlemen.
Well, let me just pause you there. Let me pause you there. Please do it in reverse order. I know you get so excited.
Oh,
reverse order, mate. 3, 2, 1.
Reverse order. In which case,
reverse order. Yes.
Our third place for the year, with a fantastic 63% return, was at Jarvie55. Congratulations, Jarvie55. That is quite an astonishing return for the year.
Bravo, mate. Well, very well done. Very, very well done.
In second place, and this was a very close run thing, in second place, we had at Smudge Dan with 83%. Fantastic return for the year.
Over the year, 83%. Absolutely staggering.
Absolutely
very well done,
incredible.
Smudge Dan. Yep, very well done.
And just pipped to the post by at Jam4U75, who returned an unbelievable 90% return for the year, with 5 stocks that included Avacta, Audio Boom, Teresa Resources, Affecta, and Upland Resources. And if you listen to the first 3 of those and thought, how did he manage 90%? Well, I can tell you that Upland Resources, for those of you that held it, shot up 500% between January the 1st and the end of December last year.
effectively
So
carrying his whole
anybody,
portfolio of 5. Yeah,
absolutely, absolutely.
absolutely amazing. Right, that's what can I say, Jam, for you. Get in touch with us, mate. Please, just drop me a DM, and we'll make the arrangements. And can I just quickly go through the prizes?
Absolutely.
Yeah, yeah. Got a
We need to know what
surprise,
he's won.
firstly, for at at Jarvie 55, who got 63%, is that he, from one of our sponsors, which is Harriman House, will be able to select from the 15 books we had, 5 books of his choice, right? I'm going to read out the whole 15 books in a second again. Obviously, our winner at Jam 4U75 gets all 15 of the books, free to join ShareScope SharePad for 1 year. And the numero uno prize is having a day with a couple of friends at the Powder Monkey Brewery Distillery in Gosport. Hopefully on a sunny day. We'll try and get down there with you at some point, make the arrangements. So you'll get down there, be treated like a king, travel around the place, have something to eat, design your own beer, taste it, organize it, design your own branding for the cans, and they're going to put together, I think it's 200, it was agreed before, cans of your chosen beer that you designed yourself, taste the way that you want it to taste. And then once all that's done, they will put it all together and dispatch it to your home address. What a star prize that is. Yeah. So absolutely phenomenal and very well done getting you 90%. Here are the 15 books, of which Jarvie 55 can choose 5 of as well, that are going to at Jam for You. Let's hope he's in, because it'd be a pallet, won't it? 15 books, or be a very large box. So The Smart Money Method from Steve Clapham, The Skeptical Investor by John Stepek, How to Pick Quality Shares by Phil Oakley, The Retreat of Globalization by Gervais Williams, Harriman's House book of Investing Rules by Chris Parker, Dear Shareholder, edited by Lawrence Cunningham, Invest in the Best by Keith Ashworth Lord, The Equity Edge by Mark Jevons, The Investment Trust Handbook of 2023 by Jonathan Davis, The ESG Investing Handbook edited by Rebecca O'Connor, The Intelligent Fund Investor by Joe Wiggins, Just Keep Buying by Nick Majuli, and that is the pronunciation, that correct one. I've got it correct eventually. And Investing for Growth by Terry Smith, and Investing Your Way to Financial Freedom by Robin Powell and Ben Carlson. All 15 are coming your way, Jam, for you. And very, very well done again. And 5 of those, please choose Jarvie and get in touch with me on Twitter via DM. So huge congratulations.
Very well done.
Fantastic prizes, mate. Very well done. So there we go. All good. Right. Interesting facts I wanted from you, Henry, was about, we're saying very well done to those guys. 90%, 80%, what was it? 83% and 60. What was the other one?
63%.
Yeah, so 90, 83, and 63. When it goes right and you pick the right ones, phenomenal, having a very, very small, tight, compressed, minimal sort of portfolio of 5 stocks. However, Henry, please extol on us what goes wrong when you chose the wrong 5 stocks. Who was at the very bottom? Not who. What was the percentage failure of the person that came bottom, without naming names, please?
Well, interestingly, it's not just the person at the bottom. More than half of our competitors lost money with their 5 picks. So the person at the bottom of the pack isn't on their own, but they lost nearly 60% of their portfolio, which is really quite eye-watering. They were mostly invested in small resource picks that I had never heard of. Companies like Sol Gold and Barron Oil. Never heard of these businesses before. They're not large listed entities. They seem very, very speculative. And whatever it is that they've done over the course of the year, it's clearly not worked. Either they've been about to find resources and not found them, or they've had resource permits taken away from them. Something's happened because the share prices have absolutely cratered. And this has been reflected really across the whole of the competition. The big moves have been driven by events, but the thing to remember about events is they're a double-edged sword. Yes, you could be in a gold mine that strikes gold. You could just as likely be in a gold mine where there is no gold. And so,
Indeed.
most of the people in the top third of the portfolio that have actually made money have been invested in big, reliable blue chip names with long track records that they pay dividends, they've got revenue coming in the door, they're profitable. Maybe they've had a speculative pick or two, but by and large, the profitable ones have been the ones that have backed established, stable, safe companies.
Absolutely. I mean, this is what we're trying to engender on this particular podcast, with regards to it being an investing podcast. Obviously, there's opportunities for people to do some trading, but it is one of the shortest time frames you're going to be in the market, the more risk there is to picking losers and picking stocks which are illiquid or very, very small or speculative or exploration companies come with risks. Come with risks, whether it's an oil stock or a mining stock, it comes with risks. So picking stocks that are profitable and generate revenue and pay a dividend, it reduces your risk. Doesn't eliminate the risk, but it reduces the risk. So absolutely. I'm going to share with you before we go back to go and talk about the indexes and how they've done, a bit of psychology here. I'm going to talk about a fantastic tweet I saw. And thanks for sharing that information there regarding competition, and Henry, and putting all the numbers together, because I know there's a lot of pressure to get it right, and stocks that weren't there, and it's like, what happened to that stock? Oh, it's changed its name. We've been through all of that. So the people that we'll talk about the other competition, F24 in a minute, but we tried to eliminate some of that so people sent names in. But a fantastic tweet by Morgan Housel. And for those of you that don't know who Morgan is the author of the Harriman House bestseller that sold over 4 million copies worldwide. And that book is called The Psychology of Money. And I've been on here for X amount of years now talking about psychology, the importance of it. Some people go, meh. There's a reason why Morgan's book has sold 4 million copies. And the reason is the importance of psychology for those of us that want to be better investors. And the book, The Psychology of Money, timeless lessons on wealth, greed, and happiness. He has a new book out as well called Same as Ever, and that's definitely worth checking out. But he put out a simple picture of the S&P 500 total returns, and it showed a date of 1871 through to, I think it was 2015, but might as well say, 2023. And it just went up from bottom left up to top right, like that. And the words that he used were well, it's my sense of humor, but the tweet almost went viral. The words at the top just said, a book called Shut Up and Wait. Each page is just this chart. And it just went like that. And it goes back to a tweet also that our good friend at Claudio H. Fox put out. And it showed 3 different pockets of investing. Daily was absolutely erratic and you didn't know what's going on. Yeah. Yearly, again, a bit more erratic, less erratic, but it shows it going up in a certain way. Then the decades one is just like that, just keeps going up all the way. So this is about trying to encourage people to invest long term here again. But I wanted to add some caveats to this and some nuances. I know it's one of Henry's favorite words, is that look at that chart or look at any chart over 100 odd years, right? And most of us won't live to be that long, and everyone's going to make all these noises about blah, 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 long-term investing. Let's add some flavor. S&P 500 we're using now, yeah? Obviously dominated by the market, which is America, and the dollar. The dollar has lost 97% of its purchasing power since 1900. 97, okay? The S&P has returned an outstanding 2,091,000 112% with inflation adjusted since 1900. Right? What does that say? What I'm trying to say? Owning or trading stocks is risky in the short term. However, not owning stocks in the long term for your wealth, and most definitely for purchasing power, is a mistake, right? Not investing long term is a mistake. So please make sure that you encourage other people to join in, save for the pensions, put money away, because the purchasing power will be eroded by the dollar or sterling or whatever currency that you happen to be in euros. So please, please, please invest as best you possibly can. There you go. There's a bit of psychology for you guys. Hope you understand it. I hope you're aware of what you've got the availability to achieve if you expose yourself to the market by doing your due diligence and investing well. Any thoughts on that psychology, Henry? Have you seen that chart?
You're spot on, Peter. It's really funny you should mention that, because totally independently, I'm actually writing a response to a reader on my blog who is terrified of investing. They're absolutely terrified of it. They've got their money in cash and they want to start investing, but they're not sure where to start, and they just see it as a risk. And part of the article I'm writing is actually explaining the fact that if you sit with cash over 10, 20, 30, 40 years, you will end up with nothing. You know, you can see it all around you. We all talk about how prices are going up. 30 years ago, you could take a family of 4 out and spend sort of 10, 15 pounds on a reasonable meal. Now, you're probably looking at closer to 50 in most major cities. Now, if you'd got 50 pounds in the bank, you could take your family out, 3 times in a month, near enough. 40 years ago, today, you can barely afford to do it the one time. And this is the reality of the loss of purchasing power. You think you're saving money, you think you're putting it away, but when you come to need it, it's not worth anything. I saw something the other day about it was a similar chart. If you save money, £1,000 today is worth £1 million in 20 years' time. The problem is, in 20 years' time, £1 million is only going to buy you £1,000 worth of goods. You've gone absolutely nowhere. You need to be beating inflation, and until we can stop central banks printing cash and inflating everything, which I'm not convinced will ever happen, you've just got to be conscious of it.
Brilliant point. Very, very well made. Now, I'm going to nip back here, Henry, and do what we normally do at the very beginning of this before we get into stocks and a few other things I wanted to share with you. The market's closed, and these are numbers that I grabbed, so they might have changed by the time I actually got the true numbers. But the FTSE closed today at 7,651, minus 32 points, at an intraday high of 7,683 and a low of 7,647. So almost near the lows of the day. Today, the FTSE All Share remains above 4,000. Closed at 4,180, minus 15 points, at a low of 4,178. So that's another interesting point there. FTSE AIM All Share continues above 700. It's at 749.71. Closed down just shy of 3 points today. So that's done reasonably well. It's holding up. We've had a reasonable start, I think, to the year for the markets. Boosted by the American market, which is still getting carried by Nvidia. Now, I want to share these facts because some people, including myself, this time last year were going, many people, most people, I spoke to this fund manager at Polar Capital Technology Trust Fund, Alistair Unwin, and we were speaking about AI and generative AI. So you've got to go and listen to this podcast. It's absolutely amazing what he had to share with us. And one of the companies that they own is Nvidia, and they've held it for absolute yonks. But Nvidia just keeps on breaking records. I'm going to throw some stats up here for you. And this is about buying the best of the best companies that are out there and seeing their global reach and seeing the potential beyond 1 year, 5 years, 10 years, and 20 years. So Henry, just strap yourself in for this one now. You ready? All right. So we're going back to 2010, 13 years ago, Henry, right? When you were still at school, I think. We know how young you are, right? £10,000 invested. Right, you were there. Someone said something about Nvidia. You went away, did your research, and you invested your $10,000, right, in Nvidia. Let's change that to pounds, okay, for our main audience, which is UK. £10,000 was invested in Nvidia, okay. Nothing happens really. We get to March of 2014. That £10,000 is worth 11,637. Okay, you're like thinking, what's all this tech stock fuss about? Nothing's happening here. Nothing's happening. 4 years I've held this. Boo hoo. I'm getting rid of it. I'll move on to the next stock, right? Because we spoke in the last podcast. Timeframes of people that are long-term shareholders was what? Sub 6 months. 4 years on, and this has achieved £1,637 increase on the 10 grand. Not worth bothering about. Okay. We moved to September 2018, another 4 years on. That £10,000 is now worth £182,599, Henry. Okay, 8 years on, it's gone up 18-fold. You still with me now? Are you interested in being long-term investor?
I might be running to my broker and going, sell, sell, sell.
Yeah, eight years, and you've gone up 18-fold, right? Okay, fast forward. Well, not so much. It's that 4 years, Henry. We're now in March 2022. The shares are worth, that £10,000 is now worth £709,000, 188.
Wow.
We then have the share price basically halves of Nvidia. The latter part of 2022, early 2022, through to 2023. We get to this point last year, everyone's going, it's overvalued, don't buy it, keep away. Everyone bails. Loads of fund managers bail out of Nvidia, right? We get to January of 2024. That halving that took it down to being worth 350,000 or 400,000 is currently worth, that £10,000 still invested, staying invested, is worth 1.358 million. Yeah, close your mouth, Henry. Don't catch flies. 1.358 million. Now, we know Nvidia is an anomaly, and it's hard to stay invested for 14 years, right? And experiencing that volatility. But sometimes staying investing and not trading and scalping 5% and 10% here, there, and everywhere, and with a hit ratio of 25 to 35%, finding one good stock can make your portfolio. And £10,000 in one stock for most of the people that are talking on Twitter isn't a lot of money. Yeah. So
that is truly, truly astonishing.
Remarkable stuff, mate. I'll carry this on a little bit, because this is one of the stocks I'm saying that Alistair Unwin spoke about, and it's in the Polar Capital Technology Trust portfolio. We had 6 trading days up to yesterday, yeah, and it added since the start of the year, 6 trading days, added to its market cap 130 billion by its price moves, yeah.
Blimey.
And since its low of October 2022, it's officially added 1 trillion to its market cap.
This is a quick hello to you, our valued Twin Petes Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe, and you'll always be the first to get the new episodes. Thank you for your continued support.
Unbelievable. Unbelievable.
It's staggering numbers,
here
mate.
Here we are in the UK, piddling around with 10 million here and 10 million there. I mean, I'm absolutely speechless. And to be honest with you, Peter, I am almost certain that if I was lucky enough to have put $10,000 into Nvidia, you know, back in 2010, by the time we got to 2018 and it was up to 180,000 or whatever it was, I would have sold it at that point. I'd have definitely been trimming it up 18-fold. You know, I've never even had a 10 bagger, let alone an 18 bagger. So the psychology of knowing what you own, and I write about this a lot, and we talk about this a lot on the podcast. Understand what you own. It's a lot more than just the numbers on the income statement and the balance sheet, and it's a lot more than just the website and the headline. Actually understand what you own. Where is it invested? What are the customers doing? What are the demographics doing? What is the economy doing? What is the sector doing? Really get under the skin of that, because if you don't, odds are you might hold an Nvidia one day and you'll never even know it by the time you sell it. You'll just give it up for nothing.
Absolutely.
So do your research.
Do your research and try to be this is why we're here. This is why Henry and I put the effort in to try and put these podcasts together, and with Alex and so on and so forth, is trying to educate and share our mistakes. You know, try for all of us to try and become better investors and hold stuff for as long as we possibly can. You know, because it's hard, and this is what I keep saying about psychology. You know, we can all improve our psychology. And if we do, we will end up being better investors. And one day when you find that stock, which is, you know, dominating that particular sector, and that sector is growing so rapidly, you'll go, this isn't an Nvidia, this is an X. And I'm hoping that it surpasses what's been achieved by Nvidia. And we've all got it within ourselves to find those stocks. We don't need for it to be tipped by anybody. And that's what we're trying to encourage here, to just research. And who knows, you know, I pinch myself, we may even find one of them listed in the UK one day, you know, that goes up 10-fold, 15-fold, 30-fold or whatever. You know, we've got one in our own sort of midst, you know, or two. Ashtead, Games Workshop, I think it's now called Fraser Group, have all done extremely well long term. You know, I asked a question on the last podcast about, have we got anybody out there that's been holding stocks for long? And two people actually replied to me, which is another statement in itself, in a sense of people not actually holding stocks for long. And that was, I think his name was Trader Mark 72, and he replied and said, let me just find the notes here that I made, that he'd held 3 stocks, one for 13 years. Let me just find it. One for 10 and one for 8. Where did I write it down? Did write it down somewhere. So he had 3 stocks, and one of them was Games Workshop. I think the other one, where did I put my notes in? Yeah, here we are.
I'll come back to you.
So yeah, so just listening to 117 now. On long-term holds, I have Clarkson, 13 years. He held that stock, the shipping company, and Renew, I think it is, RNWH for 10 years, and Games Workshop for 8. So I crunched the numbers, and at that stage, Trader Mark, who doesn't talk about it, Games Workshop a lot, just talks about it periodically when there's news. That was a 20 bagger for him, right? Loads of people talk about Games Workshop. He's the first person I've met that's got that as a 20 bagger. Yeah, so exceptional. So if you're not following him on Twitter yet, his Twitter handle is @TraderMark72. Definitely worth a follow, people. So follow that account and be inspired, and maybe learn a few bits and pieces about how to become a long-term investor. So well done there, Trader Mark, and thank you for the feedback. Going forward with feedback, Henry and I are asking you, ladies and gents that listen and give us the feedback, and thank you ever so much for doing so, to just try and tell us the specifics of what you enjoyed about the podcast, so we know which bits we're doing well, which bits we're not doing so well. And just, you know, reply to Henry, reply to me, reply on YouTube, as some of you have been doing, and we'll reply to you back, and we'll give you a shout out as and when we see something that we want to share. But we really appreciate your feedback. So thank you ever so much for that. But that's what we're trying to do here. Encourage and build a community, as was said earlier. Okay, Henry, go.
Spot on, mate. Well, speaking of building a community, I'm going to throw a question out to the audience now. So, I've been having a conversation with a friend of mine who is an investor. He's over in America. Went to school with him. He's not on Twitter, so you can't find him. But we've been debating the house building sector in the last week. So, hello, Faisal, if you're listening. I hope you're well. Now, we're both invested in Vistry, both like Vistry. And Faisal has got MJ Gleeson and has been trying to sell me on the virtues of MJ Gleeson. And I'm not biting at all. And I'm really interested to hear from the audience. What are your thoughts on it? It's a northern house builder. It isn't particularly expensive. It's on a P of 12, pays a small dividend of 3%. Its revenue comes 90% from house building of affordable homes. And by affordable, I mean super affordable. We're talking, £100,000 for a house. And 10% of their revenue comes from this sort of land development business that they've got, which is MJ Gleeson Land, I think, or something like that, where they buy parcels of land, take it to the local authority, get planning permission to build on it, and then sell it on to other developers. Now, when I looked at it, the revenue was all over the place. The earnings were erratic. The dividend had been cancelled during COVID and rebased lower. It yin-yangs all over the place. It's trading at a slight premium to book value. You can hear some gnashing of teeth in the background. That's probably Faisal going, it's not fair. But have a look at it. I'd be really interested to hear your thoughts. Do write in. Let me know what you think. Am I missing a trick with MJ Gleeson? Is it one I ought to be adding to the portfolio? Is Faisal on the money here? Or am I right in saying, I think this is just a pretty poorly controlled, middle of the road house builder without much in the way of prospects in the future? Be interested to hear your thoughts.
Well, let me share some thoughts on it very briefly. I think it's a reasonably good company, Henry. It's one of those with low cost, builders, and it's one of those slow and steady. I'm trying to pull up the charts to show what it's done over the past 10 years. It's a slow and steady compounder. So you said he's a bit, Faisal's a bit, concerned about the markets, not very, very tentative about the markets. For somebody who's tentative, they want something that's not volatile. And we know that house builders are cyclical, and they'll go up and down with the tide regarding interest rates movements and macro conditions and all the rest of it. It's a slow, steady compounder. So yeah, I'll have to get back to you on the rates of what it's done over the past 3 to 5 to 10 years, but I suspect it's done okay. And from last time I checked as well, I'm sure it's a dividend payer as well. So I'd be looking at the compounding qualities of it. That's what I'd be looking at. Is it one we spoke about builders last time, didn't we? And Persimmon came out with results today that seemed to have cheered the markets. So since I spoke about it in the summer and said avoid, and it went to sub 10, it's up 50% since then, Henry. So staggering. And that's without the dividends. So with the dividends, you're looking at 55% in the space of 6 months. Or 3 months since its lows in October, November time. So it can be done. It's a good company. Have I picked it myself? No. Would I pick it right now? I'd have to go and do some more digging because it's not one that's on my watch list. But he's not picked a bad one there. It's not throwing you under the bus.
Well, I looked at it, and honestly, we've been arguing about it all week, and he keeps coming back and going, "Have you changed your mind?" And I'm like, "No, it still looks like pile of rubbish to me." But I'm probably going to get a load of hate from holders now. But do write in, let me know. I'm interested to hear what people think.
Cool beans. I'm going to talk about 2 stocks we spoke about previously, and they came out with fantastic numbers. I'm going to speak about them briefly because we spoke about Pandora before Christmas, didn't we? Came out with great numbers. Lots of people were buying jewelry for their partners and friends and family and so on and so forth. And the shares, I think it was yesterday, hit a 6.5-year high. Yeah, so the shares are sitting there doing extremely well. Then we spoke on the last podcast also, we spoke about Greggs. And I was right. Sausages, steak bites are on a roll. What did Henry say? I love a sausage roll, me. No, Northern Nottingham lad. Shares smashed it this morning, mate. Yesterday, the shares were closed at 24.74. And today, I think they went up as high as 27 quid, 27.10 or something daft like that. So a 10%-ish movement today. So for the traders that listen to the podcast, they could have nipped in, grabbed themselves 200 points at £10 per penny spread and made an absolute fortune. Yeah. So there we're sitting there with the shares of Greggs absolutely popping and flying. Everybody wanted to buy it as the share price was going up. Nobody wanted to buy it yesterday. It was falling at 24.74. We wanted to buy it today at 27 quid. I think it closed at 26 something or other today. So yeah, so the traders were in and out and halved. I think it closed at 5% from a high intraday of 10%, but definitely going to be one that I think continues. They're looking to open more and more branches as well, and they're going to be paying a nice dividend. So absolutely smashed it again. We do what we can, mate. We do what we can to give you guys research ideas. Even the traders. All right, Henry, what have you got? Where do you want to go?
I'm going to go over to America. So I've been doing a bit of research. Well, actually, listeners will know I've been doing a lot of research into the semiconductor space. And I found another business that I love the sound of. I'd never come across before. They provide manufacturing equipment, services and software to the semiconductor, display and related industries. They operate through three segments: semiconductor systems, which consists of equipment used to fabricate semiconductor chips; applied global services, who provide integrated solutions to optimize equipment and fabrication performance and productivity; and display and adjacent markets, which include products for manufacturing liquid crystal and OLED displays. If you don't know who this is, it's Applied Materials. The ticker is AMAT. Now, I'd never come across this company before. And they seem to genuinely be a world leader in the equipment space. And I think as recently as yesterday, they announced a collaboration with Google on advanced technologies for augmented reality, which I thought was really cool. Now, their collaboration is going to combine their leadership in materials engineering with Google's technology platforms to create lightweight visual display systems for the next generation of augmented reality experiences. To me, this sounds a little bit like the headsets that you see, Mark Zuckerberg staggering around in looking like a Wally. Well, perhaps we're going to get some super awesome, lightweight, liquid crystal displays that are wafer thin. I thought this sounded really cool. Anyway, the company is pretty healthy. It's on a PE of 19, so not overly expensive. It's got a 30% operating margin and return on capital. It's got net cash, and it's buying back shares at 4% a year. So lots of things I really like in there. The semiconductor space, I think, is one that is going to continue to do well for a long time. Microchips aren't going anywhere. And these guys seem to be at the forefront of the technology. So I'd be really interested if people know anything about the company. Do write in, let me know your thoughts. If you own it, how's it performed for you? If you're thinking of buying it or thinking of buying a competitor, let me know. But really interesting company there.
It's a long-standing bellwether sort of stock in the US. They've got their hands in fingers in many pies across the semiconductor space, and it's one of those that on appearance now, given what we just talked about with the likes of Nvidia, it was one of those companies, along with 3M and others, that was sitting there, always in charge of all things that were going on. Yeah, sitting there with the likes of Intel, right? And then just got. I don't want to be unfair to it. Appears to have been left behind. Does that make sense?
Yeah.
When you've got one company that's going up, similar to this current market cap, it's like that done that in 6 days. Thank you very much. But yeah, it's an outstanding company. Been there, done that, and I think they're going to carry on doing that. They're more in the stage of doing bolt-ons. I think the thing with buybacks, doing them, Henry, it catches two things with me. That the paused in their acquisition spree. Yeah, they think they're overvalued, undervalued. Sorry, so therefore they're buying back the shares. They don't want to pay a special dividend or whatever. But they could be doing. There's lots of opportunities out there in startups. They could be using some of that buyback to purchase another company, I think. But quality-wise, outstanding company. I've known of them back in the day when I used to own Arm Holdings. They've been around for a long time, and they're going to be around for a long time going forward. It's not the sort of company that's going to be. You're going to be sitting there thinking, "Why is my portfolio down 60%?" It's down to that company. That ain't going to happen. Outstanding company of high quality, and should do well going forward. Good call with that one. And you said something. What did you say about the PE was? That sounded quite low to me.
19.
19. So what's happened there? It tells you that other people looking at everything, every other stock out there on 30, 40, 50, or when you go to the PE section, it goes blank. 19 or a company in the US that's profitable and that's in the chip business. Okay, I might have to add that to my watch list, Henry. We'll
Excellent.
see. Say it quietly so no one else hears. Good call on that one, mate. Very well done. Right, I'm going to talk about a stock now. And this is another one I think is in the sort of realms of Greg's. It's been doing the business. Not as many people talk about it. It's a quality company. It's earmarked to be doing possibly redomiciling in the US. It's listed in the UK. Henry, I'm going to give you some description here. You tell me if you can remember it, or even give you a clue. It's got an old name and a new name. Right. It is a distributor in North America, providing solutions and products for infrastructure, plumbing and appliances to heating, ventilation, air conditioning, which is HVAC, fire, fabrication, and others. The company's USA segment operates primarily under the blank brand and provides solutions and products for infrastructure, plumbing, and appliances to residential and non-residential contractors. What's the name, Henry?
No, you're going to have to tell me.
I love this because the reason I'm doing this is not to tease Henry, is because I know there's going to be some of you, ladies and gents, listening, shouting on in your car as you're doing, or maybe even on the train where you're supposed to be sitting silently, telling your other passengers what the name is. The name is Ferguson PLC.
Oh no!
Formerly known as, come on, Henry, formerly known as.
No, I don't know who they used to be. I know them as Ferguson.
Wolsey.
Wolsey. I knew it, and I didn't know it. Shame.
Well, there you go. No, it's no shame at all, mate. Well, essentially, I keep looking at the results, and the shares, the records that I've got up to today, were up 28% in the past 12 months. I've not seen a single tweet about it on Twitter. Right, 28%, rock solid 28% return over the past year. Price range £9.89, touched a high on the 28th of December of £15.22, currently sitting at £14.68. Oh boy, last results basically saying that distribution's going well, business is exposed to positive structural trends such as aging population, smaller households, aging housing stocks are driving demand. New housing and remodeling, everyone's updating the houses, changing the taps, doing all kinds of different things. The company reports its revenues and finances in US dollars, as its primary listings now in the US. the last quarter, the group sort of faced a tough year with comparables fell by 2%. But you're looking at the company and thinking, you know what, with all what's going on with the crumbling infrastructure in the US and an election year in the US and the UK, I suspect things are going to be tweaked so that people start investing in the infrastructure and the presentations of stuff and so on and so on and so forth. 95% of their revenues are from the US, hence the reason why they're looking to re-domicile there. But I think it's a fabulous company. Looking forward in the next full year, margins should be increasing to 9.2% to 9.8%. And guidance looks to be really, really good. For those that like a little dividend, it's a quarterly dividend payer. I know some people like to see those little incremental bits go in. The yield's only 1.8%, but if it's factoring in and giving you a return of 28% again this year, it's nearly 30%. Yeah, hold that for 2 and a bit years. You doubled your bubble, doubled your money, right? So yeah, that's the one that I'm sending out to people at the moment. A PE of 21. I don't think that's. I mean, it's cheaper than. Sorry, it's just a tad more expensive than your chip maker. So you're thinking the chip maker. So is that too pricey for what it does? I suspect it's already adding on and getting a bit of a US premium, a little bit in comparison to what it was getting a few years back in the UK. But it's another one that you don't see people talking about. I keep trying to find these stocks that the people to go away and research. That's not being talked about relentlessly on Twitter or other platforms. And that's the one for me today for people to go away and have a look at, see what the results are like when they come out later in the year. I suspect they'll do all right. And when they fully re-domicile over there, I think they'll take on and do very, very well indeed. So that's one there, Henry. Any thoughts? You do know of them, don't you? You heard of them
I
before.
do, and it actually it ties in very closely with the business I was about to mention, for a very similar reason. The the thing I like about it is being very, very consistent over a long period of time. You know, it's one of those names in construction that everybody knows. It's done very, very well. And there's no risk to it. It's not as though people are suddenly going to stop using them completely. They don't have risky contracts. So I like it. I just think it's perhaps slightly expensive. When you look at the share chart, it is absolutely skyrocketed.
Yep.
And maybe it'll carry on. But then again, maybe it's going to reach a peak. And so for me, I'd be looking at the technicals of that one and just trying to figure out what it's going to do next, because you could end up buying it at the top. It bounces off the top of a range and comes down a bit.
Very good call. Full year 2023 generated sales of almost 30 billion. Doesn't get talked about in the UK.
Wonderful.
Yeah.
Wonderful.
So yeah, if they come out with some good numbers, mate, I think the next thing we're going to see is a breakout, and we know the traders love a breakout, so they'll be jumping on it for the next scalp of 3, 4, 5%. But yeah, 30 billion of generated sales, mate, for the full year 2023, and barely gets a mention in the UK press and financial FinTwit community. Right. Okay, Henry, do you have another stock you want to share?
I do. I've got 2 more actually. I'm
Go
going to
for it.
mention my UK one very briefly. It's somewhat
Yep.
similar to Ferguson, also in the construction supply space. It's a UK-based, vertically integrated construction materials company. But it's one that I don't see people talking about a lot. It produces aggregates, you know, cement, asphalt, ready-mix concrete, that sort of stuff, sand and gravel, the materials that builders need to build structures. It's Breedon. Ticker is
I knew you were going to
BR.
say that. Leicestershire firm, mate. It's a Leicestershire firm.
It's a really interesting company. Now, what got me thinking about it, when I was down in Poole over the Christmas period, there's a big quay. One side of it is it's lovely shops and restaurants and the marina. The other side of it's actually a working dock. And there's an enormous warehouse on one side of it, just as you go over the bridge, which used to be for timber supplies. And it's now empty, it's abandoned. And I think what I forget the name of the firm, but the firm basically used to ship the materials in on a big barge, offload them into this warehouse that was right on this quay front. And then the big lorries could come pick up the materials and transport them wherever they were needed. Seemed like quite a cool concept for me. Anyway, Breedon aggregates. The reason it piques my interest is because, one, I suspect, like you, we're going to see an uptick in infrastructure investment. And I think that's going to be sustained for a long period of time. So these materials are going to be needed. We've got a shortage of housing in the UK, which gives you demand from the housing sector. And this is also a very reasonable business. You know, it's on a PE of 10.6. It's not hugely expensive. It's got a nice healthy dividend, 3.5%, which is about the average for the FTSE. That's covered nearly 3 times, so it's got plenty of room to grow. It's compounded its revenue since 2017 at a 16.5% annual rate, and it's compounded its earnings per share at a 15% annual rate. This has been, you know, for a business that's fairly dull and pedestrian, it's actually done really well. It's got 10% profit margin, so sort of in line with Ferguson and Wolsey. But what really caught my eye when I started looking at it, 3 years ago, it was trading at £5 a share. It's now about £3.50. But revenue and profits are well up over the period. So if people liked it so much 3 years ago, they should like it even more now. And to me, this looks a little bit like one of those, oh, we've missed that, we're not thinking about it type of bargains.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Petes Investing podcast listener, you can access an exceptional offer via SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Petes offer is available to new subscribers only, and you can subscribe using the promo code TwinPetes. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
Yeah, I think you could be right. I think it's one of those things, Henry. And it always not necessarily frustrates me, but it's typical of the markets and of investors. If the share price is going up, they want to buy it. If the share price is drifting down, they don't want to buy it, right? So today, you've seen stocks moving up. Last week, you saw stocks moving up. People were buying stocks back that they sold at higher prices. Yeah. People exited the market and disappeared from the markets, as I said in the last podcast. Even some traders disappeared from the markets last year during the summer, September time, came back. And you've got a situation where it all gets a bit too difficult. Share prices go through the lulls and they get lower and lower and decline, and then bang, yeah, they're off to the absolute races. Couple of stocks that are popped: Angle, Creo Medical, C4XD, up 100% in the last week or so, got sold off to nothing. Yeah, all of them have popped. I may have got some of them percentages not absolutely spot on, but nobody wanted them. Came out with some news, off to go, off to the absolute races. So yeah, quality stock. Am I biased because it's in Leicestershire? Yes, I am biased. Yeah. They started from absolutely nothing, mate, X amount of years ago, and slowly but surely, bolt on here, growing, supplying the Midlands and the rest of the UK with aggregates, as you say. And depending on what happens with interest rates, the builders might start having a bit of a boom again. The news from Persimmon shows that they actually can navigate these sort of waters. So they're going to need construction aggregates going forward. Infrastructure needs to be built out. Yeah, good call, mate. Solid, boring, as you say, sort of company, but definitely worth investigating. I think so. Yeah, very good call, mate. Very good call. Do you want to do the second one, or do you want to have a break here and just
Yeah.
talk about the
No,
Memphis thing
absolutely.
quickly, and then
I'm gonna.
because you've got to talk about your new charity, so I'm going to jump in here.
Oh, sure.
And a big thank you to all of our listeners that have supported us with the 2023 charity challenge, where we've been raising money for Memphis, and I will speak about all different things with Memphis next podcast, sorry. But we're sitting and closed minus the gift aid at 3,685. So I want to say a big thank you to all of you that have donated to that particular challenge. And hopefully, if you've still got any change before Henry launches his ones properly, to nudge us to that 4,000 fully, another £315 would be absolutely phenomenal. But thank you again for all those that donated. Absolutely phenomenal that we're able to just generate that sort of money and help disabled children and their families. This is what we're all about, paying it forward with this free podcast. And the people that we haven't mentioned are the most recent sort of individuals that have donated are Jeremy, that's what he gave his name as. Happy New Year, guys, and thank you very much for sharing your wisdom. Wish you well in reaching the Memphis target. All the very best, £10 and £2.50 gift aid. Then we had Will. Now, Will must be a very lucky individual, but thank you ever so much, Will. And this reads like this 7 days ago. Yeah. And I know some people mock premium bonds, but congratulations, Will. I woke up this morning to a decent premium bonds win. A nice start to the year, exclamation mark. I am a regular listener to Twin Peaks, so I'm happy to be able to share some of my good fortune with your fundraise. Bravo. Thank
you
you,
very
Will.
much.
And Will dropped in the little fundraising basket, £100. Thank you very much, Will. That's very kind of you. Already mentioned Lewis Tullett, who won some books and gave some money as well. And then we had Nick Ralph, or Ralp, who's from Twitter, and he said, really enjoying the podcast. Donation long overdue, long time ago now, but schooled in Stamford, which is around the corner from us in Leicestershire. So Memphis feels close to home. Great charity. Thank you, Nick. And Nick donated £20 and £5 gift aid. Jonathan 11 days ago said, thank you, Peter, Henry, and Alex for all the podcasts, which are hugely insightful, educational as well as entertaining, exclamation mark. Thank you very much. I think he's got us as three clowns, which means the entertaining bit. I'm not sure. I have to start to put us in a tent somewhere or something like that, with a bouncy castle and some elephants. The podcast is helping me to be a better investor. Really appreciate all the work. Happy New Year. Thank you, Jonathan. And then we had Sanjay Korea, who 13 days ago said, thank you for all you do. I think I might have mentioned this before. Sorry, so apologies repeating. £100 and £25 gift aid. So thank you ever so much. And that's what took us to the £3,685 plus gift aid. Takes us over the 4K, but we want to get the gift aid to 4K if you could still just throw some in there before Henry starts launching his fundraise. Do you want to go to your fundraise now, Henry? Tell people what it's about. Let's get it all tight up. Then we go to two more stocks and close that way.
Absolutely. Let's go for it. So
go for it. So who you chose, why you chose them, go for it.
So for 2024, I've picked a cause that is very dear to my heart for a number of reasons. They are CENTREPOINT. And if you don't know who CENTREPOINT are, they are the UK's leading youth homelessness charity. Now, homelessness is one of those topics that we all think it could never happen to us. You know, you've got a roof over your head, you're listening to this podcast, you've got food on the table. It would never happen to you, but it happens to thousands of people across the UK every year. And even more shockingly, it happens to thousands of children across the UK every year. Now, I don't believe that any child should face a future without a loving home. But in the UK, more than 100,000 children seek help with homelessness or the risk of homelessness every year. The causes are hugely complex. They range from domestic violence and drug abuse to neglect and mental health issues. But without a safe home to call their own, children across the UK face disrupted education, violence, abuse, exploitation. The lack of access to healthcare, clean water, and nutritious food, they take a toll on these kids. And a lot of them disappear from the education system and fall into a really desperate cycle of poverty. Now, Centrepoint do an awful lot of work, not only to help the children that are homeless, but to try to stop them from becoming homeless in the first place. Partly that's providing support for children that are in bad households or with parents that are struggling to look after them. Partly it's getting them out of dangerous situations, but partly it's also helping them to feel safe and secure. And if they feel like they need to leave home, perhaps helping them to see that staying where they are is a viable option and making it a safe and viable option for them. So this year, I'm asking that we raise money for Centrepoint and that we dig deep together and raise money to help fewer children end up on the streets. Together, I really believe that we can help these children find the support and protection that they deserve and that they get the right start in life. So on behalf of those that will never be able to say thank you to you because they're never going to be on this podcast, I'd like to say thank you from them to all of our listeners for the donations that I know will be coming in this year. So thank you, and please give generously.
Brilliant. Good call, Henry. I will do my very best to support you with regards to raising monies for the Centrepoint and see what we can do to encourage some communications with them as well. You've put the Just Giving page up as well, have you already?
I have.
Yeah.
Yeah.
Do you want to just give
link.
a shout out to the address for that, and we'll add it to the links as well, please?
Absolutely. It's www.justgiving.com/page/Twin Petes Challenge 24. That's Twin Petes Challenge 24, all one word.
Brilliant. Thank you ever so much for that. Really, really good cause. We've got some projects that I support here in Leicestershire regarding homelessness as well, and it's getting worse. And though, but the grace of God go I is what we always say, because it just takes something fleeting to have happened for some of these individuals, and sometimes we find ourselves fixed by what the media says, that those people that are homeless are X, Y, and Z. That's not always true. It can be really, really bizarre, extenuating circumstances that have led that person that was in a good job 3 months ago to be now, without a home. And we know of professionals that are sofa surfing. So other people end up sofa surfing for a little while, but invariably those that haven't got the funds or haven't got the right level of income end up without being able to pay rents, and all manner of different things happen. To enable that to be a difficult situation that sometimes can be for a long time, and they need support to get themselves out of that situation. And the remarkable stories that I've seen and dealt with are people that have been in situations that they thought they would never ever recover from, and for them to be back into their own homes eventually, generating revenue, income, safety, and having loving relationships again in a place that they call home is phenomenal. And you guys, ladies and gents, by supporting Henry with this fundraise for Centrepoint, could be a catalyst for someone's life completely changing for the positive. So please, please, please donate what you can afford to do going forward throughout the next 12 months. Okay, Henry?
Thank you, Peter. And thank you to our listeners.
Right. Yeah, thank you all for being so kind, and we'll see what we can do and we'll do we'll see what we do. We'll do what we can do to get this over the line, Henry. Right, I'm gonna deviate slightly now. This is the first stock I've ever spoken about from this country that I'm going to choose for. It's from France. I'm going to France, ladies and gents. Some of you shouting, "Stay over there, Pete." Yeah, I know. Hello, trolls, haters. It's all right. I know you're listening. I'm talking about a French supplier of global commercial, military, aerospace, propulsion equipment, including landing gear, avionics, and aircraft interiors. Why am I talking about this particular stock right now? Because unfortunately, part of the reason why so many people are displaced and so many people are homeless is because we've got war zones. Yeah. There seems to be an incident or a war on almost every single pocket of the globe at the minute. Yeah. And this company, unfortunately, has to supply these bits of kit. And a lot of it is very high tech. It's a very high technology company, which is what intrigues me. It's a tech stock, essentially, defense stock, technically. Carries out research, design, development, testing, manufacturing, sales, maintenance, support operations for high technology activities. Segments include, as I've said, aerospace propulsion, aircraft equipment, aircraft interiors. Segments designs, develops, produces, markets, mechanical power transmission systems for commercial aircraft, military transport, training, combat aircraft, civil and military helicopters, satellites, drones. It's in every single part of the infrastructure. Yeah. You're still waiting for the name of the company, aren't you, Henry? Sorry, keep you waiting there, nodding off. Safran. The company name is Safran. Safran. Ticker symbol SAF on the CAC indices, right? Right. So where are we at with this, and why have I chosen this particular company, Henry? October results came out. I'm not going to go over this too long. QE revenue, 5.8 billion euros, up 20.1%, 25.9% organic, right? 9-month revenue, right? So that's not the quarter, guys. 9 months, 16.77 billion of revenue, up 25.1%. Organic revenue up 25.9%. And I'm looking at it and thinking, why haven't I looked at this before? Why have I always gone shy? Oh, it's on the CAC, it's in the French exchange. I'm not going to go over there and buy anything. Oh, I'll have to change my sterling to euros and all that nonsense. The shares are up, Henry, 34% in the past 12 months.
Very nice.
No one's talking about it. Yeah. Price range 120 euros. This time last year, 10th of January. This day last year, 10th of January. 13th of December hit 168 euros. Currently sitting at 163 at the top end of its movement. Pays a tiny little dividend, but on a PE of 22, market cap of 69 billion. Free cash flow. Let me just step back a little bit. Recurring revenue operations, mate. Recurring revenue is 1.3 billion recurring revenue. I'm thinking, am I missing something here? Yeah. You're growing revenue, organic revenue at 25% a year. It's just staggering. Free cash flow, 1.4 billion, 1.3 billion.
Big beast.
What's not to like here? Apart from, and I know we've got some football fans in here that don't like the French and don't like the Germans, but hey, listen, you're an investor. Invariably, whatever stock you've got, unless it's very UK centric, you're selling stuff to France and importing parts of it to put into their gadgets and all the rest of it from France or Germany. There you go. Another world-class company sitting right in front of us, which I, for one, am guilty of never looking at before. I'm looking at it now. And if I can put that in my slow, steady portfolio and compound at 34% for the next 10 years, I'll be very, very happy with that. Thoughts, Henry?
Interesting business. It's a quality name from what you've told me. I don't know a lot about it specifically. My only reservation on it, and it's quite a big reservation, I once held shares in Babcock, and they were
Sorry, I didn't hear you. Sorry, what did you
in
say?
Babcock.
Babcock. Yes, of course. Yeah.
And they were a bit of a disaster, to be honest. It's the contract issue again. You're contracted to build something, something goes wrong, or the costs overrun, or you're delayed, and all of a sudden your profit swings into a hideous loss. And no one knew it was happening until, with hindsight, it was obvious. I'm very wary ever since Babcock of touching contractors.
You should
And I don't
let's
know.
stop there. Stop. You shouldn't be in any time in your life be touching contractors, Henry. Let's just stop it there. We've got listeners all over the world thinking you're something that you're not. Henry does not touch contractors, people. Okay? Can you want to rephrase that, mate? I know it's late in the day, but a long day.
Investing in, ladies and gentlemen. Behave yourself, Peter.
He's married. He's married. Poor old Verity's going, what did you say on that podcast?
Yeah, exactly. Get off that building site. Oh dear. But no,
The beauty,
that's my caveat on it.
the caveat regarding the contracts, you're spot on regarding all things defence and all the rest of it. Things go wrong, overruns, anything to do with contracts, blah, blah. But this is so diversified. It's got so many things going on and different segments that one contract shouldn't damage it overwhelmingly unless it's a massive. And I don't think they're the sort of company that's got one contract that's making up 5, 10, 15, 20% of the whole revenue. It's a global entity, mate. 69 billion. I'm not sure what the market cap of Babcock is, but I suspect it's
A lot
much,
smaller.
lot smaller. The smaller you are, the more risk you are, and the smaller the margins as well. So yeah, that's why I'm looking at this company now and thinking globally diversified. Another country I can dip my toe in and think, let me have some of that. A bit like Greg's as well here, folks. I'm looking at it as well in a sense of, does it get a breakout? Does it pop again? The results, the full year results, are coming out on the 15th of February. So the traders out there and the investors out there have got time to research it and have a look and consideration, and maybe add some diversification to their portfolio by adding something that's not American, that's not UK, but French to their portfolio, and add a bit of a euro even exposure to their portfolio. So add some FX diversity into their portfolio. So when the FX is flowing around with sterling and dollar, might have some euro exposure. So there you go. 15th of Feb is the full year results. I suspect they're going to be popping again, up 15 to 20% revenues and profitability wise. Could be another one that goes on the move. So 34% ish, I said, didn't I? That it's done for the year. Could be another 34% again. Who knows? French. Vive la France. There we go, mate. What have you got? You've got another one, yeah? You said?
I've got one. I'm going to be quick.
Yeah, because we've been on for a little while now. Don't keep people nodding off. Go for it, mate.
Well, bear with me, ladies and gentlemen. I think you're going to like this one. It is a global medical device company focused on providing solutions to people living with diabetes. The company's got a portfolio of products, including a range of pen needles, syringes, and safety injection devices, which are complemented by a digital app designed to assist people with managing their diabetes. Now, why has this caught my eye? If you're not sure what it is, the company is called EMBC. That's EMBC. The ticker is EMBC. And it's one of the world's largest pure play diabetes management companies. It's got nearly 100 years in existence in insulin delivery. Through innovative solutions, partnerships, and it employs nearly 2,000 people around the globe. And it's one of those businesses that I'd honestly never heard of again. Now, what interested me was the massive uptick in society of people suffering diabetes and so therefore the likelihood of an increase in demand for their products. It's a really weird phenomenon in the West and actually parts of the developing world as well. More and more people are starting to come down with diabetes. Either it's being diagnosed earlier or it's being triggered by our diet and our lifestyle. But more and more people are starting to suffer with it and are going to need diabetes management solutions. And I've got a feeling Embecta could be one of the businesses that helps to, I don't want to say benefit from it, because yes, okay, you're benefiting from people with diabetes, but you're benefiting from treating people with diabetes is the way I want to phrase that. There are over 30 million people in over 100 countries that use Embecta's products. It's on a PE of 9.4. And forecast earnings for 2024 and 2025 are an increase. It's currently doing about 95 pence, I think, in earnings. It's due to do 116 in 2024 and 130 in 2025. So analysts are forecasting quite a big uptick in earnings per share, which should drive positive share price movement. But I thought that was an interesting company that you might enjoy, Peter, particularly as you're into your biotech and healthcare businesses.
Yeah, it's an interesting one. I'm just wondering why the shares haven't done so well long term. It's one that fluctuates a lot, doesn't it? I'm looking at the
It
chart,
does.
and it's currently sitting where it's sitting. So I'm thinking, what's happened there? Looking at the chart here, over a 1 year bit, it's down 24% of the past 12 months. 6 months down 11%. It's due a turn. Is it got any news out soon, Henry, or anything? Do you know?
I don't think
That could
it's
be a
due an
catalyst.
update until the
Oh,
spring.
right. So that's my question to you, really, is that what's going to be the catalyst to get this into people's thinking? Obviously, it's got a market which is like you said, rightfully, is a growing market, unfortunately, because of our poor diets and our love of chocolates. And I think last time we were on the podcast, I was showcasing the mince pies, and my tummy is now rotund. I think it's a proper English phrase, is it?
It is
Yeah, I'm gonna have to
indeed.
do some working out, lady. Yeah, I'm gonna have to do some working out before the summer, mate, to get rid of my frangipane and cherry mince pies, which
I
I
think the modern vernacular is dad bod.
now that's a bit unkind. Come on. But yeah, so I've got that sort of tummy at the minute. So yeah, it's an interesting one, mate. I'll put my hand up, raising my hands up, folks, for that are not on YouTube. Go across to YouTube now. It's not a company I've ever looked at, ever heard of. So kudos to you for finding it. Market cap's only 1 billion. Have I got the right stats here for it?
I think so. Yeah, that sounds about
Yeah.
right.
So it's not even that. It's not huge in the sense of, one of them that's gone to the races being worth so much. But yeah, it's very interesting, that one, Henry. I don't know how you found it or what you were looking for or whatever, but that's an interesting one, that is. Um, yeah, I'll be doing some
It's
digging
worth
on that
doing
one.
some
I love the
digging.
fact it's
Yeah.
just it's what the Americans would call not even a name stock. It's smaller than that. You know what I mean? It's that small. A 1 billion is like not interested. That's tiny for their market, and it's still thriving, and it pays a divvy. Not a bad. Not. I like that one. I like that one, mate. I like that one. Yeah, definitely look into that. Definitely look into that. Right. I'm conscious of the time, Henry. So, do we just want to just have a little brief chat and tell people about the 24 competition now?
Absolutely. Very
So,
briefly
where do you want
before
to?
we go. So
So,
we have had,
go for it, Henry. Go for it.
we have had over 140 entrants. Peter has been recording and recording and recording, and I've been recording and recording and recording. We've got repetitive strain injury from
Yes.
logging all of these entrants. Thank you very much to everybody that's written in, especially the ones that followed the request to add the ticker, the full name, and the hashtag.
Yeah. And replied to one of our tweets to say that it's for this, not just put, here's 5 stocks Twin Petes, and we like searching for them and all the different. It's like it's like being in a
We did
maze.
have a couple that flew off into the ether, and Peter found them after searching for some random terms. So we think we've caught them all. So best of luck to everybody
I
that's entered.
suspect we've missed some, and I'm sorry if we've missed you. And if you have not put Twin Petes hashtag Twin Petes one word and challenge on it and reply to Henry or reply to me, yeah, please send it to us, because if it's prior to midnight on the 31st, we will try and include you, because the competition has started, but you will be included because we're not going to crunch the data until the month of January has finished. Some people have sent me the entries. I think one person sent it to me on the 6th, one person sent it to me midday on the 1st. I've not included them because they missed the deadline. So I'm trying to just stick by the rules so it's fair for everybody. But if you've already done it and we've missed your name because you didn't attach it to any sort of reply to Henry or myself, or put hashtag Twin Petes in it, I probably missed it. Henry's probably missed it. So please just send it as a game and attach it to a reply, or include Henry's Twitter handle at HTViola on Twitter, at Conquers3 on Twitter, and we'll probably still include it before 31st of January. If not, sorry, apologies. Henry, please carry on, mate.
I was going to say a good rule of thumb: if you've had no response at all from us, no like, no retweet, no comment at all, there's a good chance we've not seen it. Not guaranteed, but there's a good chance we've not seen it. So just forward it to us in a DM and we can double check it, because we don't want to miss anybody that's legitimately tried to enter.
Absolutely, very good point, very well made. All right.
The competition will run similar to 2023. So we're going to have one prize every month. That will be reset at the end of the month. So you will have 4 weeks to generate a return. So we're going to have 12 winners over the course of the year. And at the end of the year, we're going to have a bonus winner again, like this year, who's going to win a big mega prize based on the cumulative performance of their portfolio across the whole year. And as Peter says, I'm not going to run the numbers on this until the end of January. There's no point. But from then on, I'm going to do them once a month, probably mid-month for the preceding month. I will declare the winners, send a message and let you know what you've won or what you can select as your prize, and get that arranged for you. So best of luck to everybody that's entered. And if you get some news on one of your bonus holdings, please do send us a tweet about it. Love to hear how the individual portfolios are doing. You know, with 140 to keep on top of, I can't comment on all of them. But if something interesting happens in your your fantasy portfolio, send us a message and let us know, because we'd love to hear about it.
Absolutely. I'm just going to throw these numbers out because they are part of my daily bullish RNS tweets, and I know that some of these stocks are within some of the portfolios that we've been given for the Twin Petes challenge. Angle, ticker symbol AGL, I put out as a bullish tweet last week on the 4th. For the week, for that week, when it announced its RNS and it popped, it went up 136% that day. That's one of the tweets I put out, and I know there's at least half a dozen people that have got that in their top 5. C4XD was up 33% last week. I know some people have got that. Long Life AI, some people have got that, was up 32%. GTech was up 28.5%. Oriel Resources was up 16%. So some good starts for some people regarding those particular 4 stocks. And we've had some more pop Monday and Tuesday of this week as well. So keep an eye out for the bullish RNS tweets in the morning. You'll see the biggest winners of the day, no doubt. And good luck with the competition, folks. And congratulations again to our, I'm going to call him jammy winner then, but he's not a jammy winner, is he? He's a very, very selective investor that picked the 5 best stocks for the year at Jam for You 75. So very, very well done, mate. And get in touch with us. And going back to the competition, I'm not going to chase people next year. maintain a relationship, follow us on Twitter, listen to the podcast, listen on YouTube, and when we announce that you've won, get in touch with us. Yeah. Ladies and gents, we've been running this one for far too long. Henry needs to go and get some Scoobies and get something to eat. Well, I hope you've enjoyed this particular podcast. We're going to be blessed to have our good co-host, third co-host, on the show next week, 2 weeks' time, sorry. Alex the Group back with us. So there'll be three of us on I think he said on stage then, on the podcast, as if. So the three of us, and we'll keep it real for you, ladies and gents. We're going to tweak a few things and improve a few things. But that's it. Give us your feedback, reply to us, hit that subscribe button on YouTube, reply, give us your feedback, tell us what you liked about it, and we'll carry on generating some research ideas for you, investors and traders. 2 weeks' time, we'll see you again. Take care. God bless. Thank you ever so much again, Henry, for smashing it and all the research and all the work you've put in. Really, really appreciated, mate. And let's raise some money for CENTREPOINT going forward, mate. Okie dokie.
Thanks a lot, Peter. Thanks a lot, everybody. Have a great day.
Take care. God bless all. Bye-bye.
This Twin Petes Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.